So you want to invest in international stocks, right? And get some of that sweet diversity and perhaps even some income from investing in foreign stocks. But how does one do it? And is it even worth doing? That is, with the U.S. stock markets performing so strongly over the last few years. Well, those will be the subject of this video. Hi, I'm John McNeil. This is the Invest Strong Network. Welcome. So, international stock investing. You can do it several ways, in fact. If you have a brokerage account, you can just go there. You could purchase the American depository receipts of foreign companies. They trade on the New York Stock Exchange. Or, if you're brave enough, you can even invest directly in the stock issues from the country of origin, right? Now, basically, in the international markets, you have two structures. You have what they call the emerging markets. So these are countries that have financial markets that are rather nascent in their development. Some of their accounting standards are not quite there as it relates to Western democracies and economies. These are countries that are formerly known as, shall we say, third world countries, right? So we're talking about most of Latin America, almost all of Africa, and huge swaths of Asia and Eastern Europe, right? Tread carefully if you're investing in any company from any of these countries. Then you have the developed market international stocks. We're talking about basically North American stocks, Western European countries. Also, you could throw in Japan and Australia, New Zealand, places like that. They have systems of law. They have generally accepted accounting practices, things like that. And also, the markets are highly liquid. And so you can feel confident that if you want to purchase or even sell a share, sell shares, it's easy to do, right? So now I personally, in the many years that I've invested, I don't like buying international stocks of any form. Why? Well, first of all, it's just for most of these countries, their accounting is just too opaque, right? I mean, it is very difficult to understand how they make their money and their growth prospects. Sometimes they're even linguistic issues. I mean, I've seen foreign companies, you go online, try to read their annual reports, and they're not translated into English. And then if you do have a translation program, you try to translate it and it doesn't come out right. No, that's just not for me. And then also there is currency risk, right? And this is even with the developed markets of Europe, Canada, Oceania, Japan. The company of origin may perform well, right? Make nice profits. That's great. But then when it comes to currency translation with the dollar, you lose some of your return. Sometimes that loss can be considerable, right? And that's just not something you have to worry about if you invest in an American company, right? And then, of course, there's always that geopolitical risk. And this is especially true in the emerging markets, right? A regime that's here today could be gone tomorrow. War can break out at almost any time. Things are just not stable. And we're talking about your money, right? I mean, stability is the coin of the realm as it relates to investing either domestically or internationally. But even with all that taken into consideration, you still want to invest in an international stock. Well, how do you do it? My suggestion would be not to go out and purchase individual issues. My suggestion would be to acquire either shares in an open-ended mutual fund that invests in international stocks. I personally have invested in the American Century International Growth Fund for the last 25 or so years. It has performed very nicely. A year-over-year total return of around 7.22% since its inception in the early 1990s. And that's done the ticket for me. You have professional stock analysts who are specialized in foreign accounting, and they can assess geopolitical risk and currency risk and all of those things. And it spares you the duty of having to do that, right? Now, there are lots of international stock funds out there from Fidelity, Vanguard, the aforementioned American Century, Invesco. Really, all of the mutual fund houses have at least one, right? So you can peruse them all, see which one you feel comfortable with. Many of them have country-specific international funds. So if you want exposure to China or Western Europe or even Africa, which I did one time, I purchased shares in the Nile Africa Fund back in the late 2000s, right? And it, to be honest with you, didn't perform particularly well. In fact, the performance was so bad that the manager actually shut down the fund in 2018, redeemed everyone's shares, sent them their money back, shut the place down, right? And I actually had an opportunity to speak with him directly. And he was saying that the performance from the African markets were just too illiquid. There was just too much geopolitical risk. The currency translations were bad, and he just felt that it was just not the right time to do that, right? And so there is that. Okay, now, if the open-ended funds are not what you have in mind, I would suggest investing in an international stock ETF. ETFs are basically closed-end mutual funds that trade on the stock exchange, right? And so you can actually pick up shares through a broker, or actually some have dividend reinvestment plans that you can acquire the shares of ETFs, right? Now, some of the better ETFs out there, and I'll give two. The first is the Vanguard Total International Stock ETF, ticker symbol VXUS. Vanguard, very well known for having low expense ratios and very substantial performance, right? They'll have a team of managers that professionally analyze all of the stocks that make up the ETF. And so, you know, you can have confidence that once you buy the shares of the ETF, you have the best international stocks out there with the least amount of risk, all right? My second suggestion would be the Schwab Emerging Market Equity ETF. Now, this is basically an ETF for those who really want to invest in emerging markets, aka third world economies, right? So this would be the most volatile, shall we say, the most risky of all the ETFs, right? Now, the expense ratio on the Schwab Emerging Markets Equity ETF is actually a mere 0.13%. That's pretty good, considering all the legwork that they have to do to vet these companies and include them in the closed-end fund. And by the way, the ticker symbol there is SCHE, right? So those would be my suggestions. If you want to do it through a closed-end mutual fund, that is ETF, or through an open-ended mutual fund managed by professionals. Do not, repeat and underline, do not invest directly in international stock issues. All right. Thank you very much.